Hello, and welcome to another episode of the Market Snapshot series. My name is Rufas Kamau, Markets Analyst at FX Pesa. So, welcome to another session. And of course, I would like to begin with a mic test. So, if you can hear me clearly, can you type hi on the live comment section? And this will confirm that everything is working just fine. Awesome. Thank you guys for your responses. Good morning. So today we don't have a lot much happening in the markets today. First thing first, we were looking at an early release in the morning, and this was from Australia, looking at monetary policy meeting minutes. So during the release, there was some major key highlights. One of them was the renewed commitment by the Reserve Bank of Australia to make sure that inflation goes down to their expected target of between 1% and 3%. So from the meeting minutes, it was clear that the RBA would be prepared to go to any length to reduce inflation. And of course, there was a mention about the labor market, which was basically saying that it's extremely tight and low productivity adds to labor expenses. So on top of that, the existing monetary policy stance was obviously restrictive, and it will grow more so. So this basically implies that the Reserve Bank of Australia is ready to continue hiking interest rates. And as a result of that, we should be seeing the Australian dollar continue to price in that possibility and potentially gaining against other currencies. So from the ECB, there is a very strong commitment to continue hiking interest rates in July, and this would be to address the current level of inflation and continue dropping that inflation towards the 2% target. So I'm seeing quite a number of comments. Thank you, guys. Everything is good. Morning, Mr. Kamau. Hi, I'm Lucy. Thanks for coming to Tengela on Saturday. We really learned a lot. Awesome. Thank you. So as we proceed, there's quite a number of things we'll be expecting for the rest of the day. One of them being the Canadian inflation data or CPI data. So this will be very important. So we will be looking at Canadian month-over-month inflation at 3:30 p.m. At the same time, we also will be looking at the median CPI, trim CPI, and common CPI. On top of that, we also look at core CPI. So this will be a very important measure to show the progress that inflation is taking in Canada. So in the previous reading, year-over-year inflation was 5.2%, and we expect this to drop to 5.0%, whereas the monthly gain in June is expected to have slowed down to 0.3% from the previous reading of 0.4%. So at this news announcement, we will be comparing the outcome with this expectation. So if inflation is stronger than expected, then in this case, there will be increased bets that the Bank of Canada will continue to hike interest rates. And as a result of that, we could be seeing a very strong Canadian dollar against other pairs. On the flip side, if inflation comes in slower than expected, slower than 0.3%, then we will be seeing increased bets that that's the peak of the rates. And as a result, we could be seeing Canadian dollar weakening against other pairs. So overall, we expect a lot of activity to be happening here. And as a result of that, it basically means that we'll be very careful when trading the Canadian dollar at 3:30 p.m. And of course, if there's any opportunities, then you definitely go for them. So sometime we'll be looking at US data, and this will be core retail sales. So core retail sales is basically a measure of the number of receipts that were made in the last 1 month across the retail sector in the US. And these cuts across shopping malls. We look at supermarkets. We also look at clothing, apparel, and distribution centers. So when you track those receipts, you're able to know the purchasing power of the average American. So if retail sales are higher, it means that more people are buying more stuff. And it's not a very cool indicator of the trend that we are seeing with inflation. So if more people are buying more stuff and they have more money, then this higher demand basically contributes to higher prices and it becomes a problem for the Fed. On the other side, if retail sales are slowing down, then it's consistent with the Fed, and in that case, we should be seeing a weakening dollar. So a strong retail sales number would be basically positive for the dollar, and a weaker one would be negative for the dollar. So besides this, we only have another important data item being a speech by FOMC member Barr, and this will be happening at 5 p.m. So he'll be delivering a speech titled Fair Lending Practices at the National Fair Housing Alliance National Conference in Washington, D.C. later at 5 p.m. So this one, I don't think there will be much to be taken from the speech. So in this case, I think that's why it's classified as a low impact news. So the only focus for the day will be at on 3:30 p.m. Canadian CPI and US retail sale. So besides that, if you have a pair and the pair is operating somewhere within this range, then you should be aware of the effect of the news. But then if the pairs you are trading, they are not involved with the US dollar or the Canadian dollar, then it basically implies that we are focusing on technical price patterns. And in that case, it's a price action traders territory. So going into the charts, if you look at the dollar index, it was consistently dropping last week. And then from yesterday, you can see what we had. The market attempting to go up, failing to move higher and moving back downwards. And today seems like the same story. So what you are seeing with the dollar index is more or less of a sideways momentum. So it's no longer selling off the way it was selling off last week, but rather it's just moving sideways. So with a weak dollar and the weak dollar moving sideways, then it creates an opportunity for other currencies to continue dominating. But then we haven't had much of a breakout. So most of these pairs are basically consolidating. So for pound USD, you can see the price action on Friday as well as price action on Monday. So even today, it's still sideways momentum. So we don't have a lot of news fueling momentum in the markets. You can see the Euro USD, an attempt was just made break higher, which was met by strong selling. And now we are seeing the reversal happening here, but yet basically shows an extension of this particular consolidation. So nothing much is happening in this chart for the last 2 days. And today being the third day, we aren't seeing any form of volatility that would give us a trading opportunity. So for USD JPY, our analysis yesterday that was that the price will continue pushing down and test 5 days low. So it didn't happen. The market went up, retested the area again. And now what we are seeing here is the market now attempting to go back down. And it's already moving since morning. So there is a good chance that after we break today's low, we'll be looking at 5 days low as yet another test. So as for USD CAD, we saw the market make a very strong rally last week. But then yesterday's price action showed some drop in the dollar against CAD, and then some form of recovery. And today it's still not very clear. We don't have much volatility happening here. So as for gold, we had this sideways consolidation happening for 3 straight days. This was Thursday, Friday, and then Monday. And today you can clearly see that gold is attempting to breach that level, and there's a good chance we'll be seeing some more upside happening here. So after seeing this inverted head and shoulder, and then the market breaking up, now what we are seeing is a sideways momentum. The market attempts to go down, fails, and then bounces off strongly to the upper side. And once we get a clean break at this level, that is 1962 price level, then the chance is that we get to our original target or even move higher. So for a very short term intraday trade, then a target of 1973 price level is well within expectations, and this may even happen in the next couple of hours. So for Australian dollar against US dollar, we are just seeing a major swing where the market was unable to break this particular resistance at 0.68985. So after pulling back downwards, you can see yesterday and today seems like sideways momentum. So whenever you see markets consolidating like this, as always, we try to monitor that area in they look for a breakout. So when the market eventually breaks on one side, then we identify opportunities there. So as for the US Tech 100, the expectation is as expected that the market would continue running higher. So yesterday, we had this theory that the market would move up. It actually went and retested the previous high on Friday. And today, after the pullback that happened around midnight, you can see the continuation already happening. So we have seen a sequence of very strong earnings happening in the US. And as a result of these, we have seen acceleration in US equity indices with the NASDAQ 100 leading. So there's still a good chance we'll be seeing some further update happening today and even higher prices. So with this in mind, you can also see the US 500 doing the same thing. So after it rallied yesterday to our target, pulled back down for a while, and now we are seeing another continuation. Another way of thinking of this is if you think of this particular pattern as a cap and a handle, which is a continuation pattern. So we should be expecting to see even stronger or higher prices. So when you see the market pulling these stance, making a cap and then the handle, it's often a very good continuation pattern, and you expect the price to continue moving in that direction. So for US30, it's also following the same thing. So we also expect to continue seeing upward trajectory in the price. Whereas for Brent oil, it seems like the market was unable to move higher. So as a result of that resistance on the daily, so I remember showing you the resistance here on the daily. So the market formed a very strong bearish engulfing on the daily. And then yesterday managed to spike up, cross the weekend gap and get back downwards. And now we're expecting some further downside momentum to be happening in Brent oil prices. So the overall expectation is that we see oil prices dropping further back downwards to around $77.13 per barrel. So start of the week seems to be the French 40 index or the French 40 cash index. Sometimes we call it the CAC 40. So clearly, after bouncing off this particular trend line, we have seen a very strong acceleration downwards. So yesterday, it kept on pushing down before making some recovery towards midnight. So today, it's pushing back and retesting the area around 73.15. But the overall expectation is that the price keeps on going downwards. So it doesn't have to be a straight up move. Sometimes there are difficulties, the market making some pullback, but the overall expectation is that this price keeps on going down and eventually goes to retest the 71.04 price level. So as for the EU 50, it's also doing the same thing. So after failing to break this area here, you can see yesterday in the evening, and it attempted to make a recovery. Today, it's also attempting the same thing, but I would be very patient looking for signs of bearish entry, so I can go for more bearish positions. So it's a similar thing also for the UK 100. So after facing a very strong resistance here and pulling back downwards, yesterday was more of a sideways momentum. And if we see any signs of bearish entry, then we look to squeeze in another potential position towards the downside. So as you all know, these lessons are very educational. They are not meant as investment advice. They are not a recommendation to trade, so always do your own due diligence. So I'm seeing quite a number of questions on the comment section. I read somewhere that last year's daily traded volume was 7.5 billion USD. Is it possible to get this info on daily basis? Where do you get this information from days so quiet in the market? The account trading is a little bit harder to get unless you're looking at futures. Futures are regulated and centralized, whereas spot market is centralized, and centralized market is starting volume. So then market the volume. So I think for this market, this number Testing again. Can you hear me? Hello? Hopefully I'm back and you can hear me. So the next part of today's presentation is to show you the earnings that you'll be expecting for the day. So earnings continue flowing in. Remember, we are back into the earnings season, and there's quite a number of companies that will be reporting their earnings later today. So one of them will be a continuation of the banking industry reporting their Q2 earnings. And in this case, we'll be looking at the Bank of America. We'll be looking at the Bank of New York Mellon, Charles Schwab, Hasbro Interactive Brokers, JB Hunt, Lockheed Martin, Morgan Stanley, Novartis, Omnicom, Pinnacle Financial Partners, PNC. We also have Prologis and Synchrony Financial, as well as Western Alliance Bank. So with all these banks reporting, we'll get a more complete picture of whether the banking crisis is still present in the market or not. So once we get this, then hopefully we will be able to understand the strength of the US banking sector, as well as the entire stock market as we keep on seeing more earnings flowing in. So once we understand this, then hopefully we'll be able to identify the direction that the stock market will continue taking. So as mentioned, there's some form of stimulus happening from the fiscal spending within the US. Of course, with high interest rates happening in the US, then there's more people benefiting from those investments, and that money is finding itself in the stock market. So for the NASDAQ, I expect to continue some form of rally before the market eventually goes for a pullback. So this sharp drive here, you can see from December 2022, it's a very strong rally, one of the best for the NASDAQ. Actually, the best first half of the year on record. So whenever you see the markets doing this, eventually you know there's going to be some form of a pullback. And once the pullback happens, basically creates the opportunities to go short on such a market. So as per now, there's no need to have a short thesis. In this case, you just trade what you see, and the market is displaying a very strong resilience of upwards momentum. So in this case, any form of pullback, such as the one we experienced here on Friday, is being taken as a potential entry point for a continuation of the bullish momentum. So last question as we end the session. Does the change in Canadian CPI affect gold? Your mic was off, please tell again. So the Canadian CPI is not expected to have an impact on gold. So the impact on gold is expected to come from the US dollar as a result of the announcement of the retail sales data. So remember, the retail sales data will be affecting the US dollar, and gold is priced in US dollars. So in this case, if the dollar happens to strengthen as a result of the retail sales data, then we should be seeing something happening in gold. So as I mentioned, a strong retail sales report would be positive for the dollar, and a weak one would be negative for the dollar. So if it's positive for the dollar, then gold goes down. And if it's negative for the dollar, then gold goes up. So thank you very much, guys. Thank you for your time, and I hope to see you on the next session. So remember, we'll be having another session today at 4 p.m. where we get to cover more ground and, of course, get prepared for the New York session. So we'll be looking to study the outcome of the 3:30 p.m. news. We'll go into details, look at what happens with those news, then use that information to our advantage to identify trends and trading opportunities going forward. We have gold euro. I've never had you review it. Yes, I kind of ignore it because if you have an analysis of euro USD and you have an analysis of gold USD, then you can always combine the two. So gold euro is a derivative of gold USD and euro USD. So in this case, if the euro is really strong and gold is weak, then gold euro would be going down, and the reverse is also true.